Welcome everyone to this live intraday strategy webinar. Today is Thursday, February 9th. Michael Boutros here with you this morning. Good to be with you guys in the room and gals. Adrian, David, Graham, Conwall, Mark, Mike, Pooja, Sarab, Ziad. Great to be with you guys this morning. Good morning, David. So, long list today. Obviously the last webinar of the week, so we want to try to get through everything. Yesterday's RBNZ interest rate decision, what a doozy. Kiwi dollar playing out just as planned, so the downside there worked pretty well. Coming in some support in just a bit. Kiwi CAD we want to cover. Euro dollar. I like it lower for a buy still. So the immediate focus is still euro to the downside. We actually just got a signal over on the SB signal program, so that's still on tap to the downside, but I'm looking for support a little bit lower. Same on euro key. We'll take a look at dollar CAD, which came into some support. Aussie yen, Pooja, I'm with you on that. I think he could probably get another leg higher here, but just above 86.20, as I noted. I think you saw my notes. You have that weekly open. Pound yen, break of the weekly opening range to the upside, shifted the focus higher there, and then we'll touch base on gold, silver, and crude. I guess we'll just touch base on real quick now that we're getting that turnaround. Graham, so asking about the signal program. So we are in development of having our own momentum. Obviously, you know, guys, Jamie and I have been coding some basic indicators that we've been working with as a way to help you guys identify more intraday opportunities. So basically, I don't want to get too much into it, guys, because the rollout shouldn't be till late this month. Probably next month we'll roll out the beta version, so you guys can test it before we start really advertising it to the public. But it's going to look something like this. Very basic. It's going to come through email, and you're going to get the level, okay, the time, and the directional bias. It's not a standalone strategy, okay? And what I mean by that is this is to be used within the confines of the reports that we write. So if we are weighted to the upside, you know, you'll be looking to take just the long signals that you'll get via email. If you're looking for the short side, same thing. But it's a really good way to help identify entries, which is the feedback we're getting from you guys as the biggest factor here, right? So looking forward to it. We just got, this was the latest one actually. You got a short signal on euro dollar near 106.88. You saw this thing dip down into 106.74. Still looking a little lower there for the entry, but you get the picture. So we'll give you more information on that. Really excited about that as it rolls out. David, U.S. jobless claims 234. Just missed it. Nah, I was watching it. It's really nothing to write home about. Here's jobless claims did come out. You know, not a big market mover, David, I think, at this point, especially where we are on the labor market. The focus for the Fed is really on the inflationary outlook. The Fed has a dual mandate, right? Fostering maximum employment and price stability, which is inflation. So employment's pretty much there. And we did even see an uptick in the labor force participation, which is a welcomed, you know, improvement in the labor market conditions. So Graham, you know, weekly initial jobless claims reports are becoming less and less significant. It hardly makes a blip on the market. Okay. Heading into tomorrow, obviously, we'll go over the CAD data that's on tap with the employment numbers, but we will get to that in a moment. So let's jump right into the charts. Here's the dollar index looks like performance as we head into the U.S. markets. You can see the CAD is the biggest performer of 0.25%. That drew dollar CAD lower into the support structure that we were talking about last night. So I am looking for support here in dollar CAD, possible re-entry back on the long side. We'll go over that chart in a moment. Worst performer on this session, our darling Kiwi dollar, down 0.65%. Beautiful decline on the RBNZ. Interestingly enough, fundy guys will argue that Wheeler actually dropped some of the dovish commentary. And from their end, they're left scratching their heads as to why this thing dumped. For us, the technical bearings of that trade were pretty clear, trading at a major resistance level. As I told you guys yesterday, I actually got stopped at break even on the rally into the U.S. trade session yesterday, right ahead of our webinar, or I think it was during the webinar. But I jumped right back in. There was a beautiful trigger, excuse me, right after the webinar ended. and rode that right down into RBNZ. So at this point, unfortunately, I didn't participate in this last drop in overnight trade. You can get a possible rebound from here, but I'm generally still looking lower. We'll go over Kiwi dollar first. But before we do, here's what the dollar index looks like to start the session. So again, I don't want to spend too much time on this. We're exactly where we were yesterday. I still think you can possibly see a probe into the upper parallel here before a little bit of a kickback. We're generally looking for a possible breakout here in the index. Remember, seasonalities don't really turn bearish till early March. So for the dollar, I am expecting sideways to up movement possibly here over the next few days. Immediately, here's what the intraday chart looks like heading into the U.S. session. I still think you want to look for a stab higher, for a move lower, and then inevitably a breakout of this descending pattern. And tomorrow's University of Michigan confidence reports could be it. Could be it. Here's what that's supposed to look like, by the way. The University of Michigan, this is a preliminary read for February. It's supposed to come in at 98.5. We're coming off a previous, or supposed to come in at 98. We're coming off a previous read of 98.5. If we take a just look at this to see where we've been, it's actually pretty nice. We're at a pretty nice high. So the propensity here for the dollar, if you do start to see a little bit more of a build, could be a nice rebound, but I still think you treat that as exhaustion if it happens first. Ideally, we get a move lower to get long. But you know the invalidation level or the thresholds, 100 spot 72, that was the final target we looked at earlier in the week. Literally caught the highs to the pip. This is just a swing low from back here. And that would necessitate a break above that upper median line parallel. So no change on the dollar index from yesterday. Same exact levels. From yesterday. That's number one. Number two is Kiwi. Let's jump right in. So here's what this looked like yesterday. Very fruitful. We highlighted the outside day reversal that we had made a few days ago, specifically on Tuesday right here. Nice long wick reversal candle. Again, an outside day reversal at the highs on building divergence. There was so much there to look at. Here's what it looked like last night. Okay, and this was right after, obviously, the RBNZ into the open of Asia trade. 72.54 was the first target. The secondary target was down at the 72 handle. You've now taken out that as well, and you're seeing a little bit of a drawback here. I just want to highlight this confluence region, which you see right here, is this parallel. Converges pretty nicely with those swing highs here on the daily chart, also around that region. So watch out for some kickback here. Near-term bearish invalidation, you want to drop that down to 72.90, this region at this point. Here's what it looks like on the intraday chart now. This is the hourly. Okay, so we're right into this region right here. You can see I highlight it in red. If I'm giving you a different color indication circle, it just means that it's a little bit bigger of a region. So you did see a dribble there, but here we are sort of consolidating, capitulating right around that region. Wouldn't be surprised to see a pop higher, but broadly speaking, still want to look to sell rallies. The initial area of resistance I'd look for re-entry, guys, would be right around the median line. Now that we've seen a pause, the break accelerated, obviously the rebound here, resistance here. I want to start looking for near-term triggers into this region, 72.50. And again, broader bearish invalidation, I'm going to bring down to that 72.92, 72.95 region. South targets to the downside on a subsequent break, 71.79 at this point. You know, depending on where we are in time, I want to use this as a soft target. If it is later tomorrow, towards the close of U.S. trade, be mindful on this convergence. But if you check this out and you slide this down to this low, A, just missed those lows here, and B, it converges on that 71.79. So that brings it up into like basically tomorrow's trade session in U.S. trade. Actually, excuse me, into the close of U.S. trade today. So long story short, The targets are pretty clean. 71.79 would be your initial target, then the lower parallel. Okay, and that takes you basically into 71.50. Questions on Kiwi dollar? If you bring this into a 30-minute, actually, guys, just give me 1 sec. I want to see what this looks like. $72.33 would be 2 equal legs off the low. Okay, so again, this whole 20 pip region, 10 pip region start to look for initial resistance here on a swing higher. Also, the swing lows converge on the median line. Not bad. In fact, why don't we do this? That sort of highlights this region here, moving into the U.S. session. Zoom out on Kiwi dollar, please. Need a pick. Pooja, I gotcha. Here's the 1 hour. And what you're looking at, by the way, is probably the fact that this channel didn't snap. You need to zoom out, and it'll snap for you. So that's why you're looking at the confluence trend lines there. But let me zoom out for you. Okay, so you're working within the parameters of this larger scope, which we turned ahead, raised ceiling. Okay, divergence and momentum on the break. Initial, we're hitting the median line right now, which is, again, why I think you could get a little bit bigger of a bounce. And it's this level that would clear the way, I think, if we're getting a marked continuation. I don't think so. That's not my ideal scenario. My ideal scenario is that we come into this region, find some resistance, and move lower. But we'll have to see if it has it in the dollar to push that. Does that make sense, Pooja? Says absolutely, thanks. All right, cool. And again, here's the 4 hour if you want a photo of that too. But these charts are the same as last night, guys. The only thing I added was just this near-term fib there, but levels unchanged. Into support, looking for the rebound. Again, the median line converges on all this good stuff right around 72.40. Looks like a fourth wave correction. Could be. It's a messy interpretation. I could see this a couple of different ways, Pooja, but could we? Could be, absolutely. Okay, thoughts. Long term, beyond March, David says. Thoughts? David, give me some. Are you talking about Kiwi dollar here on your question? Yes, beyond March. I mean, that's a better question suited, I guess, for Jamie. I'm not really looking to target things that far out, but if this is a failed attempt at these slopes, it puts this broader decline off the highs from last year right back into focus. So I'm looking for a little bit more validation that this is a more concrete reversal. That could happen with two things, David. It's going to be either a close here today below this confluence region. We already probed below it, but I would need to see a daily close below it. And initially, this is a break of the objective monthly opening range, which was tagged quite a few times. So heading into the start of March, I would be looking much lower if this is, in fact, the legit break we're looking at. Again, near term, could see a rebound, but largely speaking, below 72.90, below 72.95. Like we said, we want to look lower. And a close below this region here would sort of open the floodgates, as it were, in my opinion, to a more concrete decline here. Remember, we've been marking divergence since the highs of January, pretty strong into that resistance region. You know, yesterday's interest rate decision wasn't all that bearish. You heard him talk again about there being overvaluation in the Kiwi dollar and how this is not sustainable and yada yada. But we've heard this from Wheeler time and time again, and his days are numbered. Remember, in September he will be replaced. So the question is he going to really push this regime into the close of, I don't want to say his administration, but his head of the central bank, his time there, like we saw with Trichet in the ECB, right? He started to make those rate moves right ahead of his leaving the central bank to really solidify the stance of the central bank and its commitment to further easing. So I don't want to look that far ahead, but David, from what the technicals are saying now, I do think there's a risk for a larger turnover here in Kiwi. And remember, we've been waiting for this since last month. It took a little bit longer than expected, granted, but I think we want to start to believe it. The break below this initial trend line would sort of be the start, let's say. And I like this slope. I know we haven't seen too much play off it yet, but I do like it. If you take a parallel, again, off the highs, it literally caught these two highs almost to the pip. All right, so I do like playing rebounds here to the downside. David, does that make sense? Hope I didn't go on too much of a tangent. He says, great, thanks. You got it. Okay, that's Kiwi dollar. Going to start to pick up the pace here. Kiwi CAD was also highlighted. Another one that played out really well on the RBNZ. By the way, here's what the Kiwi dollar looked like yesterday. Obviously, the trades disappeared the following day, but really nice trigger. Okay, here's the U.S. Open. Shortly after our webinar, this is what I was looking at. I just wanted to show you this because it was like super clear. Now, a really nice trigger break to the downside here. Very tight stop against the European highs. And then again, it was Harry holding this into RBNZ, but again, my stop was pretty close. So, again, the RBNZ charged that drop. Quarter of the ATR was 20 pips. I think we got out at 25 and didn't get a chance to get in. I thought this recovery was going to give us a little bit more give back before continuing lower. So from here, again, see if we can get a little bit more of a swing higher in Kiwi to get back on the short side. Kiwi CAD looks like this, and the daily chart was something that we had highlighted a few days earlier. Here's what Kiwi CAD looked like yesterday. Here's what Kiwi CAD looked like on the 7th. Okay, and we just wanted to highlight this. Confluence resistance, 618 retracement, really nice slope resistance, support, resistance, resistance, support, support, resistance, resistance, resistance. Nice confluence region, add to that downslope resistance. So any way you sliced it, this was a big region, and we were looking for the correction to take us back into first the 50 line here, which is what we're at now, but more so importantly, 94.30, 94.33 starts to take you back into more critical support here for Kiwi CAD. So again, could see a little rebound off structural support, but largely looking for a drop into this pocket here. Remember one thing, you're also looking at the monthly opening range low right here at 94.50. So if you're holding shorts, don't be a stickler on a near term looking for that final stretch. Be mindful of price action starting to get a little tired down there. But from where we are now, here's what it looked like last night. Okay, a newly formed slope. I added this last night. Really nice touches on the highs. Really nice touch at the 50 line. And again, a parallel of the same slope caught the lows. So I thought there could be hesitation here. I would have liked to see a rally to get back in, but there really wasn't much opportunity. Just continued to break down. So you're still looking at all the same downside targets. Nothing's changed on this. Here's what it looks like on the intraday chart. You got hung up there for not too long. Here's the 1 hour. Whoops. You got hung up there for not too long. You had the weekly open there, so not much of a rebound to get back in. It was a really tight. If you didn't get a chance to get into this one, I don't blame you. There is the drop. And again, now we're sitting at the upslope or the downslope 50 line right here. So possibly look for a pop higher. I'd like to see this drop now down to 95, this 50 line of the upslope, support, support, break, resistance. It's also the median line of downslope, also resistance for a final drop into this region. 94.40, like I said, is the beginning of the zone. 93.30, 93.20, sort of the bottom end of that zone. Okay, A nice medium-sized ATR. You know, it's not a really wide-range trade. So if you guys are just getting your feet wet with intraday trading or intra-week trading or near-term trading, this is sort of a nice pair that you can deal with. Just don't get in the way of you know, a drop like this. Don't try to get cute and fade it on moves in this pair. When the pair goes, specifically on these commodity pairs and the crosses, you kind of just want to be in the direction of the trend. So your only job is to really find a proper risk to reward ratio to get in. Questions on Kiwi CAD? Interesting pair. You don't really hear it talked about too much, but the levels are there. And when levels are there, the levels are there. I'm going to highlight it. All right, that's number 3. Number 4, let's get into the nitty-gritty euro crosses. So here's what's going on with the euro crosses. Euro dollar, again, a pair that we called a really nice turn in, played out very nicely. The drawdown now is looking for support and then saw a big reversal off support yesterday. So here's what euro dollar looked like last night. Let me start with the daily. So we talked about 108.20. We turned bearish last week. The drawdown was looking for 106.40, and it's uncanny. Euro doesn't usually work this clean, but it did on this turn. Now, I want to note one thing. If you have noticed, there's a difference in the slope here from where it's presented on the 60 and 4-hour charts than it is on the daily charts. That's really just for the time decay that you saw with these two candles. Obviously, that spread out in time tilts the slope on an intraday chart. So the daily chart had us making a perfect touch of confluence support at 106.40, which converged on the lower parallel. The intraday chart, there's 106.40, but obviously it takes you outside the bounds of that formation. So I'm going to pay attention to the low on the daily chart. On the intraday chart, I'm more stressing at this point the lateral levels, which have been super clean. Okay? So long and short of it, you came into big support here. You look to see that rebound a little bit higher. I do think that you look to inevitably sell that, but near term, I do think it looks higher in euro. Here's what it looks like on the intraday. A 100% extension off the high was having you look at 106.33. Now that we've broken that high, you want to kind of dump that position. So we're going to go ahead and scratch that. 618 retracement still remains in play, as that is still the range highs and still is going to remain near-term support in an area of interest for exhaustion. Key resistance near term, still 107.35, 107.57. Both of these regions represent areas of interest for short exposure exhaustion, both on a spike high and an emotional rally here in euro. But the levels are pretty clean. Levels are pretty clean. Here's what it looked like last night. So I was looking for a drop into this zone sort of to buy. You did get a drop into the median line, which prompted a nice rally in overnight. So you had a nice opportunity to take that long position that yielded somewhere just above 35 pips. Remember, on the euro, you're still looking for a quarterly ATR of just around 24 pips. Actually, it's down to 22 pips at this point. So still keep in mind, looking to US trade, looking for that drop lower to possibly get long. And here's what the intraday chart looks like on euro, by the way. So here was where the signal that I just showed you signaled a short position. Looks like it's still panning out. Questions on euro? You're seeing some headlines today, guys, which weigh May on things for the euro, specifically as it pertains to Greek sovereign debt. The 2-year bond yield surged like 64 basis points to touch like 10% again. This is going to bring back, you know, for those of you who were around during the sovereign debt crisis in Europe, you know, when I say we, I mean here, at least me and Jamie, you know, we're calling this for a while. This is all going to resurface again. This was all a Band-Aid. Everything they did back in 2010, 2011, when all that stuff was going down, was a simple Band-Aid to quell market concerns. Here we are resurfacing again, where Greece is saying you might need debt relief. Germany saying that, you know, the euro's already too low for Germany at the end of the day, that if they're going to need more help, basically they got to bounce from the Eurozone. And if that starts to happen, it's the precedent that it sets. So you already have this populist movement moving across Europe. You have the UK with Brexit. It could make big, big problems for the euro. Personal, and I don't want to get into the fundamentals and stray off course here. Personally, I've been saying it for years, I think the euro project as a whole is not a sustainable situation. I think that's going to, in our lifetimes, that will be dissolved, just because you can't have, a monetary union with no fiscal union. It just does, it doesn't work. All these economies of different scale, different size, different strengths are competing on the same grounds. It just doesn't really make, it's a very difficult situation. I think that'll be something that proves to be unsustainable. That being said, from a trading standpoint, look a little lower into the open here, but broadly looking for some support and a possible turn higher near term, near 107.35 in euro. A breakdown, by the way, a breakdown below the lows, 106.40. There's really nothing on tap until this median line. The lower parallel comes in around 106.10. And then you have confluence support here down on 107.80, 107.85, former swing lows, 50% retracement. Nice pivot in price. So keep that in mind. Just lower if we do clear 106.40. All right, next up on tap from euro, dollar was euro key. This will be number 5. Another Kiwi cross that played really well, obviously. Here's euro key. Not something that's been too interesting for me since. I thought this could stretch a little higher into the upper parallel, as I noted yesterday. You kind of failed just ahead of it. Here's what it looked like last night. First of all, the daily chart, how magnificent is that? The turn that we made in euro key, another one that was just insanely beautiful from a technical standpoint. You had some very strong building RSI divergence for a few months now. Price action lower low, lower low, lower low, lower low, series of higher lows. Trigger break, which was pretty messy, but the last dip there took you right back through, and that took you through the monthly open again. We failed at the monthly opening range high, which is why you could get some further kickback. Again, the momentum profile begs for a sterner recovery to the upside in euro key. Here's what the intraday chart looks like. The rally hasn't taken you through downslope resistance yet, or excuse me, the rally has taken you through downslope resistance. So I'm looking for that same downslope resistance to offer some support, and that takes support into this region. You have the monthly open, you have the weekly open, and you have the weekly opening range high. That all stacks up right here in this range at 147.55 into 147.67, let's call it. So that's the initial area of support. Bullish invalidation, we're going to keep steady at 146.92. Topside resistance targets. 148.76 is just a soft one. I'd be looking at 149 as a more major target. Near term here for euro key. Here's what it looked like last night, by the way. Coming right into the median line. Again, same thing as you were looking at with the other Kiwi cross. You didn't really get much of a pullback. Just sat there for a little bit, plowed right through, failure just ahead of that turn, and here's the pullback. Look for some support. Again, first at the weekly opening range highs, the weekly monthly opens. Bullish invalidation still down here. Looking for long entries on this decline. This would be sweet because basic former trendline resistance becomes support. Relays here with the opens of the month, the week, and the opening range high. So this is really the sweet spot, butter spot for me heading into the U.S. Open today. Let's see, there's probably a 236 right there too. Just ahead. And the 50 comes in right there too. Wow. We'll leave that on there. All right, questions on euro key. Feel free to take a snapshot of the screen if you need to. That is number 5. Okay, number 6 is dollar CAD. Here's what Loonie looks like. So Getting a little concerned on this break here to the downside. This was my ideal entry for long positions, was right here into 131.20. I told you guys about this yesterday. I do have 130.90, if you guys remember from the previous update, as the near-term bullish invalidation level. So I'd still let this thing accept a drop into this region before getting bearish. But I kind of want to see it start to hold like right around these levels. I don't want to see this dribble much lower if we're going to, in fact, head higher. Here's what the daily chart looks like. So, there's that 50 line. You've been seeing some decent pivots there. I kind of want to see this thing hold above this. You got the trigger on building divergence. Cool. Was this it? I don't think so. I would have liked to see this, like I said, into 132.60. Obviously, on the swing side of things, 30.90 is where the stop is there, so we're still holding longs on that side, and I still do love the trade. So near term, guys, stay cautious here. Let's see how the U.S. Open looks like. I'm still looking for some basing, still looking for some exhaustion. On its face, it's way too early to tell. You are getting some hourly divergence on these lows if the RSI signature holds like this. So this could be, a false break or whatever you want to call it, but broadly, I kind of want to see this thing recover pretty quick and get back above that 31.40 threshold. Here's the 30 looks like. Again, some nice divergence there too, even on those lows. So between here and 30.90, guys, I got nothing. Okay, let's see if we can't get an entry with either a dip into 30.90 with a decent trigger, or if it breaks above, again, 31.40, I'd be looking for the pullback, the zoom in retest to get back on the long side. But largely speaking, from what we saw on the momentum profile for the last couple of weeks and the breakout, which took you above the objective monthly opening range highs, I still think that you look higher here in dollar CAD. But if we bake 30.90, the bullish invalidation level, there's really nothing to stop this from going right back into the monthly open. So where does that leave us in combination with crude oil? Okay, if dollar CAD has a little bit further downside to go, that's CAD strength. Does crude have a little bit more upside to go? Well, here's what crude looks like on the daily and intraday trade. Remember yesterday we were talking about the long side. We were looking at 52.75 and just high into 52.78. Okay, you have the monthly open there, 50% retracement. You made it through, guys, okay, and it doesn't look like there's really anything lateral resistance until 53.12, which would be a 618 retracement. And then, again, to invalidate the broader structure, I would still need 53 on the upside. Remember, the whole premise of crude since the start of the year and still is bearish sub 54.20 into 55. So near term, I still think you could possibly stretch a little bit higher, looking for exhaustion here, and that kind of makes sense with crude, with dollar CAD possibly stretching a little lower, finding some support there. Any questions on crude prices or the loonie at this point? Whoops. Got some symmetry there. Some symmetry there. Really nice touch. So Conwell, these are sort of the levels I would keep in mind for now. See how many times we got touches here too? Wow. Okay, you can start getting crazy with it, but you get the picture. I do think you're marking some near-term exhaustion. I still think you could possibly see a tag at that 53.12 level, just on the basis of the Fibonacci significance there. You could see that stretch into intraday. But that would sort of make sense with dollar CAD. Right, possible stretch there into the 618 retracement 2 takes into 30.90, looking for a turn higher. Hmm. Watch this zone for support. It's 139 into 131. 10 pip zone. Just watch that for support near term. Let's get rid of this 38.2. Clean this up a little bit. Boom. And I just like that this is the former low. Don't stress that's the 236. That would sort of be resumption again. All right, these are the levels you'd want to work with near term, guys. Feel free to take a snapshot of that if you need. Note the divergence we're getting into these lows as it goes on. So if you get another divergence signal into this key pocket region, look for a possible upswing back towards 3150. What's your longer-term view for crude, Lionel? Again, so longer-term, I'm a big believer that you'll see the larger correction in crude to the downside. I don't think it's a bear market, if that's what you're asking. So I'm under the assumption, again, as I've been since the start of the year, that you wait for a large correction here in crude. It could go as low as 40s again. And then you start to look to take a more aggressive stance for a longer-term view. I mean, if you're looking longer term, I'm not sure how long you're looking at, Lionel, but if you look at the weekly chart for crude, I think it's pretty clear. I've showed you guys this chart countless times, but here it is again. And it's big. I mean, it is in an uptrend. Here's what it looks like for the last 5 years. It is in an uptrend off the lows. There was radical, crazy divergence for years as this thing was bottoming last year. So yeah, absolutely, you betcha. There was actually a 3-year trend line trigger in momentum that broke with this move too into the lows, and then that breakout tested as support, and you've been moving off. All I've been noting is since the start of the year, or heading into last year, you've been getting divergence in this rally, and this is a critical region at 55, and this was the exact high we made, Lionel, on the first week of trade this year, was the exact tag of that 55 region as resistance. Upper median line parallel, 786 retracement off the highs from 2015, and a 618 extension from the ascent off the 2016 lows. All right, so I'm thinking again, I'm looking for the pullback longer term. I am a bull on the weekly charts, but not really my cup of tea. Summer, fall. So by summer, fall, I think you would have made the pullback already. I think you start to look to fade that weakness. And again, Lionel, we're talking, way out. My gig is really more the short-term stuff. Davidson, gold will be up on tap next. Let me just hit Aussie yen and sterling yen real quick, Dave, and I'll jump right into the rest of the commodities. So Aussie yen looks like this, guys. Here's what Aussie yen looks like on the daily chart first. Pooja, what do you think? What do you think? Here's what we're looking at. So yesterday we were talking about our reluctance and the hesitation that I had because the break below the lower median line parallel didn't charge that drop that we like to see when these levels are invalidated. In fact, the last time you saw something like this was right back here. We dribbled below. The decline didn't give us the break below the lower parallel. We sat there for 2 days, gapped higher and rallied. So I'm mindful of the weekly open, which is 86.27, I think. I have it marked here. Yeah, okay. And 86.29 is actually a former swing low that's been a pretty decent pivot in price. Look, if this thing is gonna rally through there, I'm done trying to fight this on the long side, or on the short side rather. Even that level, Pooja, remember that level? Let me bring this to a 2-hour. I think is clearest. This clear pivot, which was so ridiculous, I was like so amazed by how many times this played. Resistance, support, break gives you a run, break gives you a rally, support, resistance, resistance. It was sickening how many times that played through. This break pushing higher, well, changes things. It changes things. So for Aussie yen, I do think you can climb a little bit higher from here. I'm not giving up quite yet while below 86.29, 86.27. but it better start doing something soon, Puja. I'll tell you that much. I'm starting to get really aggravated with this thing. You also want to keep in mind that we've been holding the same range we've been in essentially since the 18th of last month. Same range. And as I said, as we first started to highlight this thing a few weeks ago, 86.80 is rock solid resistance. That's the high day close from December. It's the high day close from January. It's loaded. You got trendline resistance up there dating off that December high. And every time you pulled into that region, the declines have been pretty sweet. So, you know, I'm not going to really look to play that. If it gets back towards 86.30, I'm going to kind of bail on that position. Not holding anything yet, but I'd love to get back in. Here's what it looks like, again, on the intraday. You know, even if you add the 50 line, we're going through that right now too. So, like, oof, she better do something. This is a 2-hour chart. Pooja says that red slope off the 31 high is catching the high so far if it holds. Off the 31st high. I'm not sure which slope you're looking at there, Eileen. So, sorry, 30th of January high, I think it is. In any event, watch for resistance right here into this region. I think we're looking at the same thing, just different highs. Aussie yen is going to be an interesting one to look at for the next couple of days. Stay away from it if you're kind of hesitant, guys. I don't blame you. The range is getting tighter as well. So, like, it's really tight, and the stops have been kind of hard to play with. So, haven't been attracted to much there. Mostly for me, guys, I've been mostly involved in Kiwi dollar, as I've been writing about for the last 3 days, Euro dollar, and even some of the sterling crosses I've been in and out really light because I think sterling's sort of getting a little exhaustion here as well. But anyway, any questions on Aussie yen before we move off? See if we can't lose some steam on this rally here. Sterling yen is the other one I just want to touch base on. By the way, for the Aussie yen, that update was on the 2/6, February 6th update. Here's what Aussie yen look like. So I just want to make sure we're still looking at the same levels here. Nope, updated a little bit. So go ahead and take a snapshot of that if you're looking to get involved with the Aussie yen. All right, pound yen. A quick touch on pound yen. I know Jamie's got this one covered as well in his last update. He got you a nice chart on this one. I just wanted to highlight where we've been and where we're at. The trade has progressed really well. Again, this was another one that we highlighted here back on the 6th. We've been following it for some time, basically looking for that support into this key region at 138.42. We literally came just above that before we turned base, and here we are moving higher. Levels have been unchanged, so you're coming now into initial targets at the monthly open, which is now converging on the upper parallel, and that pivot into 142.17. So watch this whole region, 141.80 into 142.17. Big ATR, pound yen. So you know, make sure you're aware of that if you get in. I just saw your comment there on the on Aussie yen, Pooja. It takes a lot for me to get to that point, to delete the chart point, but it's getting pretty close. Any questions on pound yen? It was really a pretty self-explanatory chart. 42.22, like I said, 42.20, 42.17, this is huge. First really major key region of resistance. Even if you look at the daily chart, you got the median line there off the lows. Really some swing highs from earlier last year. And the swing low for December. It's right there as well. All converge with basic channel resistance or basic trendline resistance. Also, and this just popped in right here. Let me just see what this looks like. I bet you. 100% extension right there. Sweet. All right. And that is pound yen. Steady as she goes. Now, one thing I do want to also highlight really quick is that 140.76 now represents the weekly opening range high that we broke through yesterday. And again, that's objective. Keeps the focus weight to the upside, heading into a Thursday, Friday high. Questions on pound yen? Buy pullbacks well above 39.60. 7, number 8. Okay, let's jump into the commodities, and then we'll take some of your questions. I've tried and lost on Aussie yen as well, forgetting it. Sigh, says David Raisin. Yeah, I mean, sometimes when you get into a position, guys, specifically if you give it a couple of shots and it doesn't work out, it's prudent just to sit aside. You know, the worst thing you can do is get into the revenge trades mode. And trust me, I've been there. And I spent a good amount of time there early in my career, actually. I set up shop right there in revenge trade mode, where you would take a horrible position or you would get kind of, take a hit on it, but you still have such conviction on it that you continually just, when the market says no, you got to take a step back. So for Aussie yen, hasn't said quite slam the door shut yet, but it's kind of starting to steer me away. So I'm going to sit pat on that right now until we get more technical clarity. Besides, guys, there's so much opportunity elsewhere. If a trade is giving you problems or we're not seeing the clarity we need, there's a dozen other pairs just waiting for our attention. Okay, gold. So I'm sure Jamie, if you guys if you didn't see Jamie's update earlier last night, if you have, or if you've seen my updates on gold, or you were here in the webinar yesterday, you're at risk. The long side's at risk for sure. You're coming in some major resistance, both on the weekly charts, as seen here, and on the daily charts, as seen here. Okay, you got slope resistance extending off that low that we made back in July of last year. Got the 618 extension from the advance off the lows, and you have slope support, basic slope support. Could get some kickback, right? Momentum is capping out right at the highs that we made momentum on that last stretch last month. So while I don't want to necessarily encourage a bearish, tone, I don't want to be bullish. I don't want to be bullish. Longer term, I do like the gold to the upside story. If you guys, again, remember, we've been talking about this trade for some time based on what we're looking at with the weekly charts. This is constructive in my mind. But near term, I think you're coming in some resistance, and 1248 being sort of the top of that resistance zone that we're entering right now, that could be a little bit more of a clean tell. This is the close lows that we made, that rhymes, close lows that we made back in October of last year, and it's the 50% retracement of the entire decline off last year's range, or last year's decline rather, from last year's highs. So watch this. Watch for near-term exhaustion here in gold near term. The intraday chart doesn't really look that appetizing for me just yet. My levels are all kind of geared out here, so let me just fix this for you real quick. There's 1249. Kind of a zone right there you'd start to look at as like on a stretch high. But really, the break below yeah, it'd basically have to be that low. That's sort of your breakdown zone, 1230 for the near term. Don't mind this slope anymore. And let me just check this out real quick. Might be the better slope to go with, guys. It highlights 1218, which is sort of the breakout level, the origin of the breakout, if you will. This was the level at which we turned super bearish last month, and that was the level at which you saw that accelerate. So that level actually converges on near-term upslope support if we work with this pitchfork right around 1218, 1220 once again, which is also the weekly open. So a lot to look at here. A lot to look at here. Basic premise of the trade is, guys, look for some resistance. Look for an exhaustion high sub 1249 with a break sub 1229, really bringing about a little bit more of a sharper decline here near term in gold. Divergence and momentum all up into that high too on the near term. So poised for exhaustion. Poised for exhaustion. Sir, please do not forget levels for copper and nat gas. Copper worked very well yesterday. Cheers. I got you, Conwall. Here's what, let me do silver first because I think that's the favorite trade for me. Nat gas hasn't really been on the menu for a while, but silver has been super clean. The only thing I want to say about silver is it hasn't changed. I do still see another stab at 1788, which is what I told you, Conwall, earlier. That's my level of invalidation near term. Just because of this, it's a level we've been watching for quite some time. It's just a basic pivot in price, but it converges very nicely on that upper parallel that you see there. Okay, so you have the 200-day moving average also just below that at 1787. So if you break through, expect acceleration. Okay, I do like a hold there based on the momentum signature and the like, and where the dollar is trading as well. I think you can get a bounce higher there. But largely speaking, I do like exhaustion here as well. I do like exhaustion here as well. Now, Conwall, once you start to look, the levels I gave you when we were tweeting earlier, we were chatting earlier, the levels I gave you to the downside are here. 1767 was that 618 extension. Nice catch on the high and has been the low in overnight trade. Then you have the monthly open, 1753. Then you have the weekly open at 1749. And once those break, then you look for the median line. Once we make a break below 1786, by the way, tack on a quick retracement too. I did this earlier. It's going to get messy, so I didn't want to show it to you first. This. But that also highlights that median line. We can't work with this retracement because I don't know this is a high yet. But once you start to break below near-term support, then this retracement starts to become valid. And it highlights that 1733 level. All right, so this is all on the premise basis of you sitting below 1788. If that gives out, Conwall, take a step to the sidelines, man. Let's see what happens, because if it does, 1835 is a topside objective on that kind of break, and that's a long run. All right, so that is gold, silver. Any questions on either of those? Copper looks like this. Okay. This is what I'm working with. Again, not my favorite trade. Don't really have much to say as far as commentary on this. It looks like this was a false break that we saw just earlier. I was looking at this all night. So I would be looking for a possible push higher here back into like 269. Largely speaking, it remains constructive basically while above the low we just made. So on the near term, really near term. On the longer term, again, like I said yesterday, if you get a rally into the high day close from last month, or excuse me, this was the high close, scratch that. This region here, I'd be interested in possible look for exhaustion again for a stab back down at the short side. And the reason I like this slope, again, because if you take a parallel, it literally caught the lows to the pip. So the slope looks pretty legit. So that's copper. David's saying dollar CAD near 130.90 right now. Yep, there's that pocket zone. Actually, it might be a decent entry. Let's see what it looks like. Dollar CAD. Divergence looks pretty good. Looks pretty good. Nice trigger break there. And nice trigger there. Yeah, it looks poised. I wouldn't get too excited about it just yet. What time is it? 9:26. Typically, by the way, guys, as just another word of advice, I like to actually establish positions late and early in the hour. Actually tends to work out really well. Just as we use opening ranges on a monthly, weekly, daily basis and a session basis, it also tends to work out on an hourly basis. So the first couple of minutes, the first 10, 15 minutes of the hour will tend to give you a range. A break of that tends to lead into the hourly bias for the pair. So the fact that since the 9 o'clock hour, this thing has kind of been tumbling down, I kind of want to wait to see towards the 9:30, towards the end of the 9 o'clock hour into the 10 o'clock hour. That's when I want to start to see, a low start to materialize or a turn in price. But just something I've noticed over the years. But yeah, I would be hunting for possible entries on the long side into this region heading into U.S. trade. Good tip, thanks, says David. Hey, more than welcome. Okay, what did I miss? Nat gas. Touch base real quick on nat gas. Just for you, here's what it looks like. We did make it through that resistance region that we talked about yesterday, so that does open up a little bit more of an advance here for the nat gas trade. I think you look for 130, for 319 here. It's 100% extension off the low, so even if this is a correctionary bounce, that would be sort of the area of resistance you'd look for. Matches up with a pretty nice pivot in price here if you look to the left, and also near-term channel resistance. Two touches, some nice parallel symmetry here. It gives you basically 320 as resistance. Before you start to get bearish, I think you'd need to make it back below these lows. I mean, 307 would be solid, but even near term, I would choke that up to this low at this point. And the reason being, Conwall, is that this would also necessitate a fundamental and objective break of the monthly open, which again, in my mind, would shift things back to the downside. Big region. If you look on the daily chart, that's kind of the pivot what we made with this break lower and then rebound, sit there, break higher. All right. Hope that helps there on nat gas. What questions did I miss? I knew there was something I needed to come back to. Thoughts on gold, I got that. Your advice are precious as your levels. I follow them, always helpful. Thanks a lot, says Kamal. I appreciate that, Kamal. Cheers, mate. It's what we aim to do. All right. I think I have got all your questions out of the way right into the end of my hour. So guys, if you have any last minute questions before the close of the week, feel free to throw them on the message board now. Not sure I want but 5-minute chart divergence on euro dollar. Let's check it out. Let me know if you have any last minute questions now. Okay, so that last stab got as low as 106.72. Divergence, I don't see it yet. I don't see divergence yet on the 5-minute. So remember, when we're looking for divergence, we're looking for an extreme in price to not be reflected here. And it never matters the wick. The only thing that matters is the close of each candle. So you haven't seen any lower lows here in near-term price, nor have you seen any lower lows in the oscillator. So not quite there. Oh, Graham says, sorry, Kiwi dollar. All right, let's take a look at Kiwi dollar. So the only divergence you may have seen here was here. So this may have materialized already. Into the highs, no divergence either. Quite, yeah, I mean, it's subtle. See where Kiwi is on the price chart and relative to our levels as well. Yeah, I kind of want to see Kiwi higher to get in. I want it into this sweet spot. 72.33 into 72.40 would be like a kiss. That would be a dream come true, I think. If we can get there in early U.S. trade, that'd be nice. Pooja says, on a side note, how does FXCM exiting the U.S. market affect us? Guys, no effect whatsoever as far as SB Trade Desk is concerned. We are, completely independent. We have no relation with FXCM anymore. We haven't since the IG sale. So that has no effect on us. As traders, if you're holding accounts with FXCM, do be advised that they're in talks right now with transferring those accounts to Forex.com. An old employer of mine. I worked with Forex.com, Gain Capital for, three plus years back in the 2004, 2005, 2006 time years. So, that should be a pretty smooth transition. You haven't received any information from FXM, but I suppose that you will in the next couple of days for those of you holding accounts. I'm holding an account with them too, so I'm in the same boat as you, Pooja. And I think that should be a pretty smooth transition. Okay, so I wouldn't really let that concern you at all. My first day with SB, learned a bundle tonight. Thank you, says Dave in Australia. David, it's great to have you on board. I saw you come in yesterday, man. Cheers, and again, feel free to reach out with any questions that we can help you out with. But it's good to have you on board. Pooja, you're more than welcome. Guys, I'll wrap it up here. I will see you all tomorrow morning. I wish. I will see you all next week on Tuesday. Back here on SB Trade Desk Tuesday, Wednesday, and Thursday to pick up the pace again. Keep in mind tomorrow we do get employment data. I do want to take 1 second and go over that. The employment data from Canada is supposed to look like this tomorrow. Unemployment is expected to hold at 6.9%, but you're actually expecting to see a contraction in monthly employment in the tune of 10,000 jobs. Also, a slight downward revision has already been seen from the 53,000 blowout number we got last month down to 46, not a big change. So as a caveat, we'll always want to see whether the employment gains came by way of part-time or full-time. Obviously, we've had an issue with Canada in the past where largely all the gains in employment were coming by way of part-time. So that continues to be a factor. It'll be something you want to pay attention to, but the last couple of prints have been very encouraging. So that data comes out at 8:30 tomorrow, and with where dollar CAD's trading, might be the reset we need, okay? So keep that in mind heading into tomorrow. We'll keep you updated on the SB Squawk handle. All right, for real this time. Cheers. Have a great session. We'll see you next week.